Now, world markets have taken quite a knock today on concerns over global growth. The Asian markets ended the day deep in the red, while the markets in Europe have fallen to a one-week low. For more on the equity markets, we've got Kimberly Lim joining us on the show from London. Cathy Yang joins us from Hong Kong. But Kim, I'm going to start with you. We are seeing a sharp fall in equities today across Europe. Tell us what's the reason for this.
Well, it's looking like a decidedly grim Tuesday so far here. Now we're seeing European shares down around a one-week low. Weighing on sentiment here, fresh worries about Greece and just where the country is heading. Traders are citing talk that restructuring may not happen now until next week. Now, it's still not clear just how much participation Greece will see for its bond swap. And, of course, a failure to agree would send Greece straight back to the edge of a disastrous default. Official word out of Greece is that there is currently no plan to extend the March 8 deadline for investors to participate. Looking around the market, auto stocks are the biggest fallers. The Stoxx 600 sector index there down more than the 2% mark. Analysts are saying that concern about global growth is really pushing the sell-off this session as well. Disappointing numbers out of the Eurozone recently, and of course China's weaker growth forecast very much weighing on sentiment.
Right now, Kim, the euro is at a 2.5-month low. Tell us what the outlook over there is.
And that's right, George. Investors are wanting the comfort of those safe havens this session. As I mentioned, recent macro data is putting investors very much back on edge. The Eurozone PMI yesterday really highlighted the weak outlook for the region. And, of course, the uncertainty ahead of Thursday's Greek bond swap is also keeping the market very much on its toes. Now, looking forward, if all goes according to plan on Thursday, analysts say that is going to play well for the single currency, but obviously any sign of delay or further complications will pressure it.
Right, Cathy, if I could bring it to you, we did see the markets in Asia today falling over growth worries. Tell us what drove losses today.
Well, when you get concerns over slowing growth, those growth-oriented stocks get hit big time. And when you lay over that with the geopolitical risk involving Iran pushing up oil, then you get investors rushing for the exits. Markets here in Hong Kong had a complicating problem. It was stake sales. After a heady run-up over the past 2 months, companies here in Hong Kong are rushing to sell new shares to raise capital, a move that dilutes the value of existing shares. Now, all these led Hong Kong to skid to its worst loss in 3 months today.